Welcome to Building the Blockchain podcast. This is for January the 23rd. I'm David, and we're here in New York. We're be able to have this podcast to bring people together. This podcast, I want to explain. We're coming back, and we're moving our podcast. So our podcasts were originally, and they still are on. You'll be able to find original 10 episodes on Talk Radio NYC. Internet radio, but we decided to in the future to move forward and bring it over to Anchor.fm. So Anchor.fm has a podcast platform where we can have the podcast broadcast to more people on Apple, and now we're on Apple, we're on Spotify, we're on Google, and so we're on the different podcast networks that are part of Anchor FM. So we're happy to be here, and we're happy to have these new episodes coming up every week. And so we're looking to do on Building the Blockchain is to educate people about blockchain and the different types of aspects of investing in projects and the people who are bringing these projects to the investors. We had different events last year, and those events we want to, if you don't know what we did, I want to let you know we had some events that were around blockchain. And then we brought those people on who were appearing on at our events, blockchain and healthcare, blockchain and legal, and different panels that we had with experts who were investors and projects. We brought them together. We did 4 conferences, and then we saw after September how the blockchain atmosphere kind of changed. And there's a lot of volatility in the stock market and a lot of volatility also in cryptocurrency market. So we wanted to do and switch over for the new year, have more events that are more frequent and also have more focused. So we're going to have more events instead of having conferences with 150 to 300 people. Where every 3 or 4 months, we are now going to have events at the fireside chat events and podcasts like this on a weekly basis. And then we're also going to have the fireside chats on a monthly basis in New York and Los Angeles. And they will be talking about blockchain and how it's transforming our lives in different aspects. So we're going to be in Los Angeles February the 20th for our next fireside chat. That's going to be blockchain transforming payment processing and the media, and looking at the way the payments are being processed with Ripple and with different types of cryptocurrencies that are using different types of blockchain applications to speed up payments. We'll be talking about that. We'll have a panel of experts on that, and then we'll also have a panel of experts on blockchain and the media. So there's a lot of aspects of the entertainment industry that are going to be affected by blockchain, whether it be in the media, film media, or gaming. That's going to also be something we'll talk about, and that'll be in Los Angeles, February the 20th. Then we'll be back in New York, March 21st, and that'll be blockchain transforming real estate and how real estate is being transformed. Real estate is another aspect of blockchain that we can go into for a very long time. There's going to be a lot of aspects from titling of land recording on blockchain, from actually recording the mortgages and processing, titling and deeds, and the different aspects that we're going to be talking about with blockchain and real estate. So that'll be coming March 21st. And then we'll be back in Los Angeles April the 10th. And then we'll be back here in New York in May for Consensus. So that'll be kind of the wrap up that we'll be having coming up in the spring lineup. So I wanted to talk a little bit about how we'll have the spring lineup of our events coming. And then we'll also be coming and letting you know that these podcasts will have the speakers and the people who are coming on supporting our event. And we'll be talking to those people. They'll be coming on. And then we'll also be talking to people who have previously spoken at our events. So we'll be talking to different experts and different people that you'll want to hear on this podcast. And tonight we'll be having a person coming on. And so we'll be able to bring on a guest that I have here at this podcast. and we'll be talking about a few different aspects of blockchain and the capital markets. So, blockchain and capital markets is going through a transformation also. That transformation is a lot of investors are looking at it and looking at blockchain as more than the pump and dump scheme that was going on over the last year or two. And anything that was an ICO, as long as it had a white paper, and maybe it didn't even have to have a white paper sometimes, they were getting funded. And a lot of that funding was just not used effectively. And a lot of these companies did not succeed. And that's going to happen whether they use cryptocurrency or not. But looking at how this is in its infancy, we want to make sure that we're looking at the cryptocurrency market and the coins now. We want to get a current look at it since we've been away for a few months. It's been a few months since we've had any conferences or any events to talk about the capital markets. So I'm going to bring on my guest here tonight, Sean NASARI. How are you doing today, Sean?
Hey, how's it going, everybody?
Great to have you on. So, Sean, you attended, like I was saying, other segment that you attended some previous event last year here in New York. And like I was saying, we want to talk about the capital markets and how they changed since last year. So could you talk a little bit about yourself and what you're doing and what you're seeing now in the markets?
Yeah, sure. So my name is Sean NASARI. I run business development and operations for TokenSoft. TokenSoft is the leading global security token issuance and management platform, meaning, as you were alluding to, since the days of ICOs have graduated, in the world of compliant token raises, we are the leaders in ensuring that global token standards, compliance, and the highest level of security and reliability are met while you're going out and doing your fundraising. And then also managing the life cycle of that token, which can include everything from tax liabilities, custody, cap table management, and secondary market transactions. Prior to that, I've been a long-time entrepreneur, been involved with the capital markets and mainly on the early stage capital formation. Was born and raised in Silicon Valley. Went down to school in Los Angeles at USC, was very involved with the entrepreneurship community down there. Kind of had my hands in a lot of different things, everything from helping companies start to where my real forte came in was getting ready to raise capital, going out and actually raising capital, and then going to market with that capital. I've been on the capital raising side as both an advisor and consultant, as an entrepreneur looking to raise capital. My first startup that I did wholly was a equity crowdfunding platform, one of the first ones under the Jobs Act that went out and helped other people such as myself raise capital. And then I've also represented family offices, angel groups, and even have done some venture scouting. I kind of tie that full circle. What we're seeing today in the security token world, and I really like to move away from the term token, because I think it's a very loaded term that drives everybody to asking me, so when's the price of Bitcoin going up? So let's call them digital assets or digital securities. Essentially, blockchain technology and smart contracts have enabled us to do in early stage capital formation what everybody hoped the Jobs Act was going to do in terms of unlocking capital, encouraging a new class and participation of investors, and generating liquidity in terms of secondary markets. So that's the background on myself. And now to take it to the question, capital markets, right? I think what we saw in 2016, 17, and 3/4 of 18 was capital market frenzy. The stock market was at all-time high. Real estate was booming. You were seeing developments. I mean, any major city you went to, there was construction everywhere, skyscrapers left and right. Every 1AA market you went to had construction and new developments left and right. Public markets, private markets were booming. Private equity was booming. M&A was booming. Every side of capital markets was through the roof except for the IPO industry. That had slowed down because there was just so much inflows and outflows of capital. People were making money, people were spending money. And I don't think anywhere echoed that as well as we saw with the ICO craze. Now, however, I think as we started seeing toward the latter half of 2018 and certainly going into 2019, perhaps given geopolitical climates, perhaps given domestic political climates and just people being weary of, the most recent recessions we've had, which weren't that long ago, I think you've seen people starting to get a lot more conservative again. You're seeing people slowing down in terms of writing checks. You're seeing the stock market slow down. You're seeing housing slow down. And you're seeing prices come down. So I don't want to say we're seeing a collapse or anything like that. I'm not predicting a recession. And what I'm seeing is more conservative outlooks on capital markets today.
And so you think with that conservative outlook on capital markets, because we had that downturn, do you think that has slowed down the inflows into the digital asset market?
So the digital asset market, as it relates to capital markets, is an interesting one. If you look at the other industries I previously mentioned as the benchmarks, if you look at real estate, if you look at the public markets, meaning the stock markets, and you look at the private markets in terms of M&A and private equity, digital assets are very much the teenagers. And this is kind of the analogy that I've been giving to people the past couple of weeks since coming back and trying to get back into the swing of work, right? And everything in crypto and blockchain years is like a self-accelerated 10x, right? So 1 year, digital asset securities, the first 4 happened in 2017. And in 2018, I want to say there was roughly about 20 security token or digital security offerings. So right now where we are is I want to say we're in like the awkward teenage years. So last year, first 2017, all right, cool. We have a nice healthy baby. Last year, we had a lot of success stories. You had companies like Hedera Hashgraph raise over $100 million. You had the Filecoins and T-Zeros that also raised high numbers. You had companies such as Keep Network and Handshake that were able to raise from all the biggest investors on Sand Hill Road, the Andreessens, the Sequoias, the Lightspeeds. You saw PwC and Deloitte all creating full-scale blockchain divisions of their company. So what that shows me is the kid has potential, right? The kid has potential. It's time to start investing into it. You saw Goldman Sachs start buying up players in the space. You saw NASDAQ and ICE, which owns NYSE, start buying up exchanges for the secondary sides of things. JP Morgan and Morgan Stanley all opening up cryptography desks. Institutional capital, which I didn't think was going to happen until the SEC finally made a ruling, has earmarked billions of dollars, which is a drop in the bucket for them. All the Ivy Leagues have earmarked a couple $100 million to $1 billion to be invested into blockchain and crypto projects. So that shows the potential. Now we're in those awkward teenagers. 13, 16 years old. People are starting to experiment. A lot of people are interested, and people are starting to get creative. Let's tokenize debt. Let's create tokenized ETFs. Let's do tokenized private REITs. Let's do tokenized art. Let's do the tokenized debt on my building, not the equity. Let's start doing fixed income style investments that pay out dividends on tokenization. Let's tokenize gold and minerals. So people are in the experimental phase, but as it happens with teenagers, they don't have the access to the capital because the capital markets have dried up a bit. And people are still very much in the educating themselves phase. So I would say with digital assets, right, anytime you decide to be conservative, you have to cut out the risky things first. People understand real estate. People understand the stock market. People who are investing in real estate and stock market are going to continue to invest in real estate and stock market, but they're pulling the reins a little bit. Not to say that there isn't money to go around, but what the industry is missing is a key catalyst to reignite it and to get the money flowing back in. And I think the market as a whole is missing that. There hasn't been any major economic event to show us that we're going one way or the other.
Saying that there hasn't been a really big boom or there hasn't really been a big bust.
Exactly. We haven't had subprime mortgage busts.
Yeah.
There hasn't been any interest rates being lowered or raised. There hasn't been any new job creation. There hasn't been any stimulus, and there hasn't been any any tipping point. There hasn't been any system that broke. What's actually affecting the U.S. global economy from a capital markets perspective isn't the U.S. economy itself. It's the global markets. The global banks are hyper over leveraged. South America in an absolute free fall. Europe, absolute free fall. I mean, there's 2-3 countries that are anchoring each of these geopolitical regions, and I think that's leading towards a macro correction. But I think a couple key catalysts within the digital asset space can reignite it back up.
All right. So you're talking about the digital asset market, were you talking about the I
was talking about everything as a whole, but it's all
because there is some stimulus going on, and there are some things that are going on. With the U.S. government had stimulus put in place, and there are reductions in unemployment's been down pretty.
Unemployment numbers are always an interesting statistic, because if you're, I forget the exact time, but if you're out of a job after a certain amount of days, they remove you from unemployment and they put you in another bucket. So those numbers can be fudged.
Yeah.
Not to mention, and the reason why I want to talk about macro indicators as a whole and as it relates to digital assets is because as digital assets sits today, it's an accredited investor game. So you have to be accredited in order to participate. And for the viewers at home who aren't familiar, it's $1 million, minimum $1 million liquid assets, 200 or 250K annual, or 300K with spouse.
Right.
So I think that narrows it down. Back when I used to know these statistics, when I had my equity crowdfunding platform, it was about 7 to 8% of the overall population.
Okay.
I would hope that number has drifted a bit higher to maybe 9%, 10% of the population. But you have to think of all these factors, because at the end of the day, the people participating in at least larger digital asset security offerings are going to be high net worth individuals, qualified purchasers, family offices, funds, and at the very minimum, just your general accredited investor.
And like you said, there's some endowments that are coming in and some institutional money coming in.
There is, in a major way. Now, are those institutional dollars and Wall Street dollars going towards this new class of, I don't want to call it a new class of security, because it's the same securities, but all we're doing is evolutionizing it, not revolutionizing it. Or revolutionizing it, not evolutionizing it. What used to be paper by the Dutch Indies Company graduated to Wall Street, graduated to computers, went back to paper for private market, and is now becoming digitized. So we're not changing securities, and I don't know if these endowments are going to be investing in digital asset securities, but they are going to be investing in blockchain.
Right.
And that should trickle back down to everybody else.
Right. Yeah. On the university level, yes, because those places of education, they want to have the developers and have as a point of emphasis on their campuses, because those are the jobs of the future.
Sure.
But then also, they're looking at, on the investment side, having the endowments and having investing in different types of blockchain projects and having different types of, even some crypto funds and different types of investments that the endowments are starting to look at and saying we have to put 1 or 2% of our money.
Yeah, endowments can put between 1 to 4% of their overall funds into very high risk investments,
which if you want to call alternative or the
high risk,
going to better sort of alternative, yes. Right. So, and then that can come, and then would include blockchain that we're talking about.
Exactly.
So that's perfect. Yes. And so that's the good news. We're getting a bigger pool of investors, and they're coming on board. But things have slowed.
Sure.
So I think basically a lot of people are going to look at the situation and say, is it going to just be just the haves and the have-nots, and all the haves are getting everything, and the have-nots. This, we thought, this was supposed to be for social good, and blockchain was going to try to bring some kind of equality. Maybe that's a little bit altruistic and a little bit naive, but people were looking at that, and I think, as these deals and the deal flow gets smaller, that's still going to be there, but I think it's, the bottom line is the profit, and if it makes money. If the deal is solid and it makes money, that's what really is important.
At the end of the day, that's exactly right. We are talking about investments, and while there is an opportunity for altruistic investments, while there is blockchain for good businesses, just as there is not-for-profit businesses here today, and there is non-profit businesses, and there's for-profit businesses. The value chain that needs to align from corporate is up to each individual corporation, and it's up to each individual to figure out what their value chain is and how that aligns with the companies they're investing in. Certain investors are only looking at the bottom line. They're only looking at ROI. Other investors, and I like to say, my generation, Gen Y, we do like to see companies with corporate social responsibility clauses. We do want to see companies that are making money, but they're also doing good. And I think that demand is going to increase. I think blockchain and distributed ledger technology enables for that to happen due to economies of scale, but it's not a promise of blockchain. And it's certainly not a promise of digital assets, because digital assets on their own, it could be anything. And I think that's what we're seeing more of. We're seeing, me personally, and I'm not speaking for the industry and I'm not speaking for TokenSoft in any shape, way, or form, my personal opinion, these digital asset security offerings are, and the reason why I refer to them as that and not security tokens is because I think this is drifting away from crypto investments as the stuff we saw with ICOs, and it's more of a private equity, traditional securities types investments with the added benefit to the issuer, meaning the company, the shareholders, the people distributing the shares, is they can track their cap table better, they have more visibility because they're able to use blockchain and smart contracts to see who's holding on to their tokens, how their tokens are being used, and leverage that to create communication channels. And then as the investor, really all the upside is for the investor with this. They have the added benefit of liquidity. They have the added benefit of automation, dividends, buybacks, disbursements, all get done automatically through the blockchain and through the smart contracts. Like I said, I'm a startup guy, right? I'm sitting on advisory shares, consulting shares, investor shares, partially vested shares of companies that I have no idea what they are, where they are, and how they even work. And if a company gets acquired or those shares get sold, I have no idea. No one's going to inform me. There's no automatic smart contract to do so. So this evolution is actually, it's not for the benefit of the entrepreneur raising the money. It's really for the benefit of the investors. And I think that's an important fact, right, and an important hurdle that a lot of people are missing with this.
And that's really necessary because the money won't flow unless the investors are comfortable. So to get those processes in, to make the investors comfortable is very important to keep the deal flow going, and to make sure people that are trusting these deals have to do their due diligence and making sure what they're doing is and what the investment is saying is what they're really going to do with the investment, because a lot of people are taking the money and taking the funds and then doing something else with them after they get them. So I think by having these, like you said, now that they're teenagers and a little bit more mature, I think a lot of some of these deals are, like you said, it's not the Wild West as much anymore, but it's still not where it's fully mature, but it's getting there. And that's a good sign. There hasn't been too many. The profit deals have been the ones that have really been getting all the news. But there are some nonprofit uses, and there are some nonprofit projects that are out there that are getting traction and getting capital that we haven't heard of also.
Oh, absolutely. There's a lot of stuff going on within Africa. There's a lot of stuff going on with renewable energies, solar. A lot of projects like that are doing lots of good. There's a lot of projects out in South America that are trying to combat the inflation that's going on there. There's a lot of stuff going on with kind of like self-governance, a lot of stuff going on with, community reward incentive-based blockchain projects.
Yes.
They're not the ones catching the headlines, unfortunately. They're not the ones raising $100+ million and selling out in 30 minutes. But there's a lot of good projects out there that are leveraging DLT and blockchain technology to fix a lot of inefficiencies and pass those savings on to the end user and the community.
Exactly. Yeah. That's the thing is the inefficiencies. That's one good thing about blockchain. It's getting rid of a lot of the inefficiencies and a lot of the redundancies that are going through a lot of processes and a lot of supply chains. They can be savings that can be gained. So I think that's great. That's what we're looking for for these to have these talks. We want to bring on investors and get their opinions because we want to make sure that we're looking at the current situation of what's going on because, like you said, there's a lot of volatility and there's a lot of different types of projects and a lot of different types of dates that are going on so quickly. There's AI and then there's robotics and then there's this and then you're looking at, like you just said, the governance part. Some countries using coins now because their economies are collapsing and their currency is no good. So they have to use cryptocurrency. Haven't even talked about yet. Maybe we can talk a little bit about that to finish up. What do you think about some of the self-governance and because I think Venezuela was in the news today. So that was one country that has used. I think they had the coin, the Petra.
Yeah,
coin.
I don't know if I want to touch on that too much.
But I'm just talking about
just
for overall, just from a big aspect. Not just private companies using blockchain, but what you've seen with governments and institutions, and universities and governments use of blockchain and crypto.
I think it's important to separate the two. There's the use of crypto, and then there's the use of blockchain. Crypto, I would like to see being used more in countries such as Venezuela, Argentina, Iran, where they're experiencing hyperinflation as a way of trying to balance it, but instead the government's shutting it down. A good example is Venezuela's Petro, which claims it's backed by Petro, but I don't think anybody believes it is. And then there's the use of blockchain. The use of blockchain is prevalent. IBM just announced they have their blockchain accelerator. They had their opening kickoff party yesterday. There's a lot of companies that have quietly been using blockchain, and there's a lot of companies that have been loudly using blockchain. But I think one important thing you talked about as it relates to capital markets and volatility that we were kind of touching on earlier that I kind of want to bring full circle. The reason we saw so much volatility last year while the markets were hot is because the entire market cap of the industry was barely $150 billion. It's a drop in the bucket, right? That's like half the size of U.S. automotives alone, right? If you reference like the dot-com bubble, and again, these are rough numbers I'm pulling out anecdotally. Dot-com boom hit like a $7 trillion market cap out of like a $20 trillion overall tech market cap. Before the bottom of that fell out, and I think that's where you can draw the most parallels between ICOs and the dot-com booms. I mean, companies were literally just throwing dot-com onto stuff that didn't need dot-com, and they were planning their IPO while they were writing their business plans, kind of like white papers, releasing tokens for a product that doesn't even exist yet. So what we're going to see this year, and a lot of people have pushed back the dates on it because of the volatility and the new price lows of the crypto winter, as people like to call it. It's the influx of real capital entering the market. Endowments, hedge funds, Wall Street. Obviously the price of something fluctuates 200-300% because the market cap of it is only $400 million. So somebody putting in a couple $1 million is effectively going to manipulate the price exponentially. Once that real money gets put in and we have a market cap closer to $1 trillion, hopefully $2-3 trillion, then we're going to start seeing a lot more price stability. And that's probably when we're going to start seeing these cryptocurrencies as a true store of value. Then again, that's not the world I live in. I don't deal with crypto. I deal with digital assets. And in the digital asset world, the capital markets are being built essentially from the ground up. So yes, we're existing within the confines of security laws as we know them today. you're doing a Reg D, you're doing a Reg A+. Once that gets allowed, you're doing a 506C, you're doing a 506B. You can look up the terms on your own time. It's basically private offering, public offering, real estate, art, ownership, fractional ownership. But the infrastructure around it to really enable these things to take off is what's still being built. So these are the secondary markets. Here in the US, they're called ATS, as alternative trading systems.
Right.
There's one live today, Open Finance. T0 set to go live soon, and then there's a whole myriad of them that are probably going to go live, probably 20 to 30 by this time next year, globally. And then I'm hoping there'll be a big consolidation, and there might be 5 or 6 in 3 years. You're seeing a lot more people entering the custody space. You're seeing a lot more market makers entering in. You're seeing a lot more professional broker dealers coming in who actually know how to go out and raise money and put together a PPM. And digital asset security space is going to start reflecting the public markets a lot more. And I think if you look at the scrutiny of what's going on with NASDAQ and the reluctancy of so many companies going IPO, granted this year is going to be an exception because I think Uber and Airbnb have to go public this year. Otherwise, there's some warrants that expire and they get penalized very heavily. But there's a reason why companies don't want to go public. The public markets are tough. The level of disclosures, the level of scrutiny, the level of manipulation, being a slave to quarter over quarter bottom line gains without looking at the underlying business is not a true way to scale a business. It is a way to make money, but it's not a way to scale a business. And that's what the benefit of doing the STO, or as the SEC refers to it, digital asset security offerings, so DASO. That's where you can really see the upside to that. You can participate in public money and public capital, and you have people who are now vested in the success of your business. I don't think issuers should be worrying about, am I going to create a liquid market? You should be worried about creating a profitable business. Let your investors worry about liquidity. If you have a good company, a good private company, it's going to take 3-4 years for it to mature anyway. So people shouldn't be selling it after 1 to 2. Not to mention, there is a 1-year security lockup anyways.
Yeah, Reg Ds.
With the Reg Ds. So I don't think issuers should be worrying about liquidity. I just think investors, it's important for them to know that they have that option. And the example I give is, I say once a quarter for the past 5 years, I've had somebody try to sell me or my friends Series B, Series C shares of Uber, Airbnb, Hotels Tonight, Pinterest, SpaceX. It's because these companies have been sitting there, and these private shares have been sitting there for damn near a decade, and they've gone up 100x in value. But what good is that doing to me with a piece of paper that says I have $80 million when my bank account shows 2, and I can't sell it? It's difficult. So that's the problem we're fixing. Everybody's looking at this as an evolution for entrepreneurs. But really what this is the best thing that's ever happened to investors and the best thing that's happened to public markets.
It's going to transform the capital markets.
Exactly.
And I think, like you said, and it's going to start with the asset-backed tokens and
I think they make the most sense.
Assets. Real estate, yes, real estate and art. And so people can see what's tangible and identify to that and go and relate to that, and they can see their investment, and they can at least have some kind of bridge between digital and the tangible world.
I think, having been around the startup world for as long as I have, after we sold Generator, I helped launch the first Regulation A+ platform under Start Engine. And it took me about 10 phone calls to realize Regulation A+ is not for early stage capital formation, meaning it's not a place for you to go out and raise your seed in Series A round. It's too expensive and it's too cumbersome. The reporting requirements, the cost of legal, the cost of filing, it's too cumbersome for 99% of companies that need to raise their first rounds of capital. And I'm seeing a similar parallel with doing a digital security offering. You need to have a couple $1 million already raised to go out and raise $20 million. Unfortunately, most of it goes to legal, but you have to pay for a platform You have to pay for compliance. You have to run your smart contract, the technology, and then you have to go out and market the thing. You have to do a global offering. So I think the digital assets, having asset-backed stuff, creates something tangible and real that's easier to digest than a speculative long-term investment in a corporation and to wait for a liquidity event or follow-on rounds. And to actually touch on that, by tokenizing and creating digital shares of your company, the diligence process and keeping a clean cap table and knowing exactly who all your investors are, it's going to make it easier for you to raise subsequent follow-on rounds from additional investors. Because if anybody who's been through a Series B, Series C style diligence, it is rough to try to organize all the documents, try to organize the cap table, who's where, who has what, duplicate names, different addresses, all that kind of stuff. It's a lengthy process, and this is going to streamline everything.
Yes.
So that's what I mean. Like, everybody's looking at this as an revolutionary thing for startups and entrepreneurs to go out and raise money. But really, the benefit of this is for investors to put everything on the blockchain. It's for investors.
Yes. And then once those investors are able to invest in these projects on the blockchain, then like we were talking about before, that capital will start flowing there, and the market cap will rise because there's a mechanism in place, and there's a way to exit, and there's liquidity for investors, but there's also long-term security and protection for the issuers who are actually building the companies on a long-term basis.
Yep.
Yes.
Yep. You're ensuring ongoing compliance, and you have a lot more controls. At least if you work with us, we can restrict transfers. We can even reissue tokens if somebody loses their key or if something's out of date. It's very easy to go back and reissue those tokens. Whereas with traditional securities, you got to hunt somebody down, and if you have to rewrite something in the bylaws, I don't even want to go down that Pandora's box. But I mean, I'm confident after we have that one or two big catalyst events in blockchain, meaning a major corporation puts forth a truly attractive 5-star tokenized offering that gets thousands of participants. Right. Meaning SEC finally comes out and gives it a green light. Knock on wood, maybe even they open up who's allowed to participate with investor suitability instead of just accreditation standards, meaning if someone's proven that they understand the risks associated and they understand the opportunity of the investment, that they're allowed to invest, not just some dentist who has $1 million liquid. Some catalyst event like that, or a Reg A Plus offer with a globally known name brand, some sort of event like that to really accelerate everything. I think that's the event we're waiting for.
Hopefully that'll come up in 2019.
And I think once that happens,
2019, it might be
nobody will have to worry about acronyms anymore. It's not going to be a DASO. It's not going to be an STO. It's not going to be a smart security. It's just going to be the way securities are done moving forward.
Yeah, that'll be a great day, and we're looking forward to that day. And thank you very much, Sean, for coming on this episode. And so this is the Building the Blockchain episode. And we had Sean NASARI from TokenSoft on. We just finished up talking about capital markets and what we're looking forward, what we saw back in the beginning and what we're looking forward to in 2019. That's the end of this broadcast, and we'll be coming back soon with our next broadcast. Have a good night. Take care.